Hey, welcome to the exchange. Let's talk Roblox. What the heck happened yesterday? What's the bull and the bear case? And what's the actual valuation of the company going forward? Let's dive into some of the Q4 supplemental materials. This came out yesterday after their earning call. So this first chart I pulled up, this is the revenue chart. Obviously, massive growth. So from first quarter 2019, $110 million, all the way to fourth quarter 2021, $568 million. So you really see that strong, strong incline growth there. And really, what happens is 2020, you see this big bump year over year. Basically revenue. What happened is obviously the COVID struck. I mean, Roblox is the perfect platform for kids or younger people out there to really kind of engage, connect with friends, etc. Especially when things were closed, lockdown, pre-vaccine, etc. Also, I want to look at some other charts too. So this is bookings. So it's basically almost like spending on the platforms themselves. This is actually when you spend Robux. This is what basically they call it bookings. This is the same thing, synonymous. You really can see there massive growth. You can see, look at this 2Q of 2020. Just huge uptick. I mean, 229% growth, 200% growth. I mean, just these massive year-over-year comps in 2020. That's why Roblox as a platform was so exciting when it first IPO'd, just because these growth rates were just, absolutely incredible. Now, obviously, it's slowed down quite a bit coming out of COVID. Schools opening up again. Just engaging for time. It's a lot more competitive out there, various platforms. Really, it's still a pretty strong growth, though. I mean, 35%, 28%, 20%. Yeah, so it's very important as well, too. Those are daily active users. It's called our DAOs. So you can see that massive growth there. We're sitting right now about 49.5 million daily active users, ending fourth quarter 2021. Again, almost 100% growth rate in 2020. We saw it basically in the revenue side too. And this really drove the revenue base, which is why you saw that huge uptick in 2020. And it's still pretty strong basically in 2021. Now, for the past 3 years, there's been a strong correlation between the actual daily active users and revenue growth rates. So that's been a strong trend. It's starting to break a little bit now. We're starting to see daily active user growth rates increase, but the actual bookings actually not increase with it, which is definitely a red flag going forward. That's why really stocks drop, I think, quite a bit looking at it. So this is actual average bookings per daily active user. This is really basically our comparison rate, or basically our growth run rate. And really, you can see in the past year, it's been relatively flat, or right around $15 per quarter. Saw a big uptick in fourth quarter 2020. That was obviously pre-vaccines, preschool openings, everything else happening. So it's really kind of your max, really, I guess, bookings per daily active user. It's really kind of that max tailwinds for Roblox going forward. And now they're fairly facing some of these headwinds coming out of this COVID, pandemic and everything else too. What's going to happen? How they're going to be able to basically maintain these booking rates per user. So you saw it really in Q3 and Q4. You saw -2%, -10% year-over-year comps. Again, it's hard to comp 2020 because it's such a weird year just for everybody. But really starting to see Roblox, they're starting to have some issues right there. But really the money slide for why it dropped is a January 2022 slide. So Q4 for 2021 wasn't that bad actually, but January we had a great user rate. So 54.7 million daily active users, 32% year-over-year growth, absolutely fantastic. Hours engaged up 26%, fantastic. Average booking per daily active user down -23% to -22%. Just horrendous, absolutely horrendous. And that's the big fear is, hey, is this a one-time blip or is this a long-term trend? And that's the big fear is they can keep growing and growing and growing, but if they don't grow their paying user base, they're going to have problems going forward and have problems with some of their OPEX expenses, which we'll dive into that later. Revenue growth obviously is increasing, 64%, that's totally fine. Bookings, this is the flat one right here. So it's 2 to 3% year-over-year growth, which basically is stagnant. So you have 30% plus active user growth, and you have 2 to 3% booking growth. I mean, that's just horrible. Basically, that mismatch divergence is why the stock's dropping so hard. But yeah, let's dive into the valuation real fast and dive what actually is going to look like going forward and what's the actual true stock price for fair value, in my opinion. So it's a little model spreadsheet I built right here. So everything to the right, so 2022 and beyond, all the way down to 2028 is forecasted numbers. Everything on the left, so 2021 and back is obviously it's known numbers. It's in the Q4 2021, December 31st of this last year. So pull the numbers for the basically 10Qs, 10Ks for 2020 and for 2021s. You can get 2019, 2018 numbers from their S1. This is a pre-IPO filing. They have to file before they IPO. These numbers are all from there, from the 2018 and 2019. So we really see, right, again, just like looking at the actual other materials, I mean, just massive growth increases from 2018 to 2021. I mean, just huge numbers, 56%, 89%, 108% revenue growth rate. I mean, obviously, I think we're going to drop in a little bit in 2022 and then 2023, just because just base effects going forward. Also, as well, I mean, it's just coming out of COVID. It's hard to compete for time, especially for younger people, younger audiences. Want to get outside, want to go do things. But again, Roblox is here to stay. It's not going away. I mean, the platform itself is it's part of our social kind of like constructs we have now between like digital streaming devices, games. I mean, the metaverse, etc. I mean, they're definitely very much in that in that field right there. Cost of revenue, they give it to you. They don't break it down at all. Gross profit. This is basically looking at the actual revenue minus cost of goods or cost of services. What's the actual gross profit? Again, great margins, fantastic. 7% plus, and it's been that way for the past 3-4 years. Going forward, I don't see it changing that much. Honestly, I think the margins will maintain themselves. Just because of the nature of the platform. It's basically a software as a service kind of platform or like model, so it's not that bad. But really the big issue for Roblox is the OpEx going forward. So developer exchange fees, this is basically content creators on Roblox themselves. They can cash out their Robux for real dollars. I think the currency or conversion rates, for every 1,000 Robux, you get $3.50. You can convert that. And that's basically what this is right here. This is Roblox paying their content creators for basically creating either content or in-game skins or whatever else it might be, all digital content. But you can really see here, this is just a massive growth rate, which isn't bad. It's just showing you, hey, developers are really getting aggressive. They're going out there and trying to earn basically the Robux and or dollars. And it's going to increase massively. I mean, I think 2022, we're going to have a very large increase. So, I mean, basically, based on the revenue base and everything else, too, and the user base, it's going to keep growing and growing and growing. You really have seen that already. This might be a little aggressive, but I mean, I think really to maintain their daily active user rate, growth rate, they have to really kind of have those strong exchange fees. Now, they could dilute it, but we'll see. Infrastructure, trust and safety. This is basically their hardware side of the business. It's one of those things they can control a little bit, but not too much, because obviously all the servers and everything else too around the world, they just have to have it. You really can't cut it down that much. You can consolidate a little bit maybe in some of the data centers, but it's not going to change that much based on the actual really scale as they grow. Now, R&D, this is the weird one for me, because if you look down here, you can really see the R&D expenses as a percent of revenue. I mean, it's just massive numbers right here. And I really need to dive a little bit more into what they're actually investing in with the R&D. Hopefully it's going to, things with strong ROI, but we'll see what happens with that. But, I mean, this R&D number has got me a little bit nervous as an investor, and I'd be a little nervous, too, about where that money is going to. Make sure it's going to good places overall. G&A, again, G&A is not bad. Sales and marketing is not bad. But roughly 10%, and sales and marketing is like 5-6% overall. So not huge numbers, but the real big issue we have here is looking at the actual OpEx total percentage of revenue. 108% of revenue, 94% of revenue. Basically, what's happening is you have a strong gross profit on the top line, and after the cost of goods sold, but then OpEx is absolutely killing them. I mean, it is rough, which is it's going to drop as they scale and as they grow and as they gain efficiencies. But the problem is, though, is they're burning so much cash trying to do that. And if there's any kind of like tailwind or headwind they hit coming out of COVID, where all of a sudden the Dow will start dropping or potentially book can start dropping like dramatically, like we saw in January 2022. That's the big fear going forward. So the idea is if January 2022 is a reflection of the full fiscal year, then they're going to have massive problems. And this model is not as negative as basically that, that version of events. This is a little bit more leans a little more bullish side, but again, it could be much more bearish. That's really the bearish case we see there. But what I see going forward for 2022, 2028 is OpEx basically coming down as they grow, as they scale. The developer exchange fees are going to be pretty high just because of the nature of content creation. Both creators and consumers on both sides of the market, they have to be there, otherwise the whole model fails. Infrastructure should come down, R&D should come down too, unless it's something you're spending on that has a high ROI, high ROI output. But we'll see what happens. Again, operating income, it's very negative, not too surprising there. CapEx, I made some assumptions going forward. But really what you're seeing right here is, they're burning about $500 million last year. I think 2022, especially with the headwinds they're facing, they might burn $800+ million. I think this 2022 is probably the worst year they're going to have potentially, really for hopefully going forward. But 2023 should recover. And I'm saying by 2026, they should be a positive or profitable on a net income basis, which ideally that's the case going forward once they come out of this COVID and basically growth rate and everything else too. But we'll see what happens with that. But let's look at the actual valuation. So I basically did a fiscal year 2018 operating income. Took that number, multiplied it by an EV over EBITDA multiple. I gave it 18, a little bit aggressive, but I think based on the nature of the AR, VR potential in the future and the metaverse plays, whatever it might be, I think it might just justify that actual multiple. But again, this is all up to interpretation, all up to opinion. Cash and cash equivalents, I took 200% gross to FY28 profit, came to 1.6 billion. Long-term debt, I assumed 1.75 billion. This might be a little bit low based on their nature of their cash burn rate and the cash they have on hand. So they're burning about I'm assuming $800 million in 2022. They have about $3 billion in cash on the current balance sheet right now. So near term, they're absolutely fine. I think FY22, they're absolutely fine. Really, the problems might come in FY23 and FY24, but let's look back at this. So that assumes a market cap there of $29 billion. I assume a stock comp dilution rate of 0.7%. Not too aggressive based on the nature of how high the valuation is and how high some of the and the stock comp expense is not that high based on the nature of the market cap. So shares outstanding in 2028 looks like here a little over 600 million shares. That comes to stock value of $49.34. So a little bit below where we're at right now, but this could change though too. I mean, I think looking at this is almost a little bit negative, but the bull case here is it interviews, AR, VR, maybe some haptic feedback in the actual, almost like a metaverse play in Roblox. Basically tweak their compensation fees for creators, maybe not make them as aggressive, get their OPEX costs under control. I mean, take us under control a lot faster in 2022 and 2023. I mean, this stock could skyrocket, but then again, I mean, we'll see what happens with that. But that's my thoughts. I mean, let me know what you think. If you like the video, definitely hit like, subscribe if you like the channel overall. But yeah, have a good day.